Hey guys, I know we talk about Listing Booster a whole bunch, but I gotta tell you, it's not uncommon, I mean this, for a loan officer to generate organically north of 1,000 leads per month. A lead is somebody who is showing interest in a property and willing to give you their information to see it. That's a good person to talk to. It's what you do with it after that really matters, isn't it? So listen, if you want to get into Listing Booster and you have to use the system, it requires your work. As does everything else, anybody who says otherwise is lying. But if you use the system, which is not hard, and our strategies, you too can find success where you aren't right now. All you have to do is click this banner right over there, and we'll put together a webinar for you and your team. Looking forward to it.
Whipping the yam, whipping and flipping the yam, turning her brick to a lamb, re-rocking the dope.
Okay, everybody, so we know that these home prices all around the country right now, they're just a joke. It's too much money.
But could you pay me in advance?
You serious?
I was just in Phoenix, Arizona a couple of days ago, and you couldn't find a house for under $300,000. I was north of Chicago, Illinois a couple of days before that, and the same thing. Houses are too much money. Again, we all know this. But the thing is, these home prices have an effect on people's psyches, what they do. Now, what we're finding is that first-time homebuyers who want to buy homes are just throwing in the towel and resigning their situation to long-term leasing. So get this, Rent Cafe noted that during this 10-year period from 2006 to 2016, the number of families with children living in rentals increased by 16%, while homeownership rates fell for the same demographic 14%. Now, the information was taken from the Census Bureau, so you know it's accurate. So think about this for a second. You have a swing 16% away from homeownership and a swing 14% towards renting. This is a 30% shift, 30% over a 10-year period. Now, that's a trend that will devastate communities and will permanently scar the housing industry. So, 80% of millennials want to buy homes right now. Make no bones about this, they want to buy them, but they simply can't. We get this information from Forbes. They don't have the cash and they can't make the payments. So again, from Forbes, economic factors that are delaying the process sometimes by as long as 2 decades. Now this assumes a 20% down payment. Still, even if this is reduced by half, only 33% of millennials would be able to save the amount in a 5-year period or less. On a side note here, why in the hell is Forbes running a survey that assumes that you need 20% down to buy a house? The truth is, most folks in this country still believe it or not, that you need 20% down to buy a house. Now, that's a side note. Nevertheless, you do see the problem. The vast majority of millennials are thinking, I need to wait at least a decade until I can buy a house, and as a result, we're seeing a historic exodus away from home ownership and permanently resettling as renters. Remember, 30%. 30%. Oh, that's just so far. And what does the next decade hold for us? Which looks a hell of a lot worse than what we just came out of. So is this the only problem that we're looking at here?
No.
See, the problem is there's even bigger problems as a result of all these renters. As home values rise, families quit having kids. Am I gonna go there? You bet your ass I am. I'll take it a step further. When home values climb to unattainable levels, people quit having kids, and the valley between the haves and the have-nots, or the owners and renters, widens. Now, if you think I'm joking, well, I got a graph. Now, this graph shows from 2009 to 2017, the higher the home value or the bigger the bubble, the fewer families have kids. You'll note that the darker the color, the fewer the kids. And the darkest red is the largest appreciation in neighborhood values and the people who are having the fewest number of kids. Now, the thinking is, as families go from rural to urban and gain more wealth, they have fewer kids and focus more on how they raise their kids, that being higher education and more opportunities. Now, the flip side of that coin is this. The rural families that can't afford the urban jump are stuck on the outside and oftentimes can't get off the farms and suffer from lower education and fewer opportunities.
Her favorite foods are sketty and butter, and she likes drinking Red Bull and Mountain Dew.
Now, according to a study by Cal State University San Bernardino, counties with the highest home ownership rates have significantly higher high school graduation rates, lower crime rates, both violent and property crime, and reduced poverty rates. Now, of course, on the flip side of this coin is lower home ownership rates changes all of these fields for the worst. And I remind you, in the last 10 years, a 30% shift away from home ownership. So what's the solution? I mean, part of me thinks that we ought to pray for another housing recession. Is this a bad idea? According to Black Knight Financial, we have $797 billion in tappable equity, more than we've ever had in the history of our country, so I think the market could sustain a pretty significant correction or housing recession. I think that would bring more long-term young people, renters, back into home ownership and shift some of these alarming socioeconomic trends associated with renting. Now, this totally sucks for homeowners, but it's healthy for housing overall. Or maybe the other solution is to convince renters that they can buy, that they don't need to wait decades, as Forbes would suggest, to have your 20% to put down. So here's what I want to know. Something is going to give. Okay, something will in fact give. We as the real estate industry, we could change the message and market the hell to first-time home buyers, or simply watch them continue their exodus. Think about this, guys. Without those first-time home buyers, if we don't do our marketing, there's no move-up buyers because there's nobody to buy their house. And when there's no move-up buyers, the correction that I'm talking about, or the housing recession, becomes inevitable, like it or not. Hey guys, listen, if you're meeting us for the first time, make sure you subscribe. We're gonna send this to you every day, a little bit on the housing industry. Now, if you're watching us on a regular basis, it totally helps us if you share this with other folks. So hit the button and share. With that said, I'll catch you tomorrow. And if you're at Inman in San Francisco, make sure you say hi to Frank. He's there selling KeyBoom, a very cool tool.
Serving a new Maserati in a brand new Maserati. That's a whole lot of new money.